Hello students, today we have to discuss the difference between straight line method and written down value method. So the last class it was already discussed about the concept of straight line method and written down value method, and today we have to discuss the difference between these two. So you have to prepare three columns. So the first one, that is to be basis, the second column, that is straight line, and for third column, that is written down value method. So basis, the first bit, that is to be depreciation charge. In straight line method, depreciation is calculated on the original cost of the asset. Now come to written down value method. Depreciation is calculated on the written down value of the asset. That was we already discussed in the last class, in the sense straight line method original cost and WTV method written down value cost. What is original cost and written down value cost? Let's say the machine will be there. We can say the example here. Let the machine cost is 1 lakh. It is your 1 lakh. Now when you to calculate SLM method, let's say the depreciation is your 10%. Now when you calculate the depreciation at that time, 1 lakh into 10 by 100, so 10,000 is your answer. So that means depreciation is calculated on the original cost of the asset. Original cost means what? It is to be 1 lakh original cost. That is the reason you can write down here, that is to be original cost of the asset. But in depreciation is calculated on the written down value, in the sense original cost. If it is on first year, that 1 lakh, then 10,000, 1 lakh, 10% of 1 lakh, 10,000. In the second year also, when you to calculate it is second year, the machine will be again the depreciation is your that same value, 1 lakh into 10 by 100, in the sense it is also 10,000 in second year. In the throughout the year, whatever may be the years are there, if it is on third year also 10,000, fourth year also 10,000, in that way continue. But in case of WDV, what happened here? The answer is your WDV is what? Depreciation is calculated on the written down value of the asset. Written down in the sense first is 1 lakh, you have to 10%, same question, 10%, that means 10,000. Now in the second year, it is to be, when you to calculated depreciation, it is to be on 90,000, because written down value, here you have to see written down value of the asset value will be reduced to the next year. That means 1 lakh minus 10,000, that means 90,000. So the depreciation is your 90,000. Second year, 90,000 into 10 by 100. So that means what? 9,000 value will be there. So it is write down written down value of the asset. Then come to the second bit, that is to be amount. The amount of depreciation remains the same for all years. Here you have to see remains same. So here is first year 10,000, second year also 10,000, third year also 10,000. That is the reason you can write down here, that is to be the amount of depreciation remains the same for all years. But in case of straight line WDV method, the amount of depreciation reduce year after year. You see in the WDV what happened? Reduce. First year is your 10,000, second year it is to be on 9,000. It is to be 9,000. So reduce. And when the third year will be there, again it is reduced, because you have to calculate it net year, whatever the net value are there, in that base, on that base you have to calculate the depreciation. That is the reason you can say. So here the depreciation reduce year after year. Then come to third bit, zero balance. Straight line method. After the expiry of the working life of the asset, the balance in the asset accounts reduce to zero. In the sense, when you to calculate 10,000, 10,000, 10,000, after a lump sum period, after 5 year or 10 year, whatever, then the value of the asset becomes zero. It is to be 1 lakh, then 10%, 90,000, 90%, 10%, 80,000, in that way continue, then it value will be zero. But in case of your written down value method, the balance in the asset account will not reduce to zero. Then come to the fourth point, depreciation and repairs. The combined cost of depreciation and repairs is lower in the initial year but higher in the later year. in the sense lower in the initial year. At first it will be lower one, but at last it will be, when the time will be maximum one, it will be higher. Then come to WDB. So the combined cost of depreciation and repairs remains more or less equal throughout the period. Next point come to suitability. Suitability. This method is more suitable for assets which get depreciated on account of expiry of the working life of the asset, and in case of WDB, this method is more suitable for assets which require more and more repairs in the later years for their working life. Now come to last point, that is to be calculation. How it is to be calculated in SLM method? As you know, it is direct calculation, so it is easy to calculate the rate of depreciation. But in case of WDB, it is difficult to calculate rate of depreciation. As we know, the value will be reduced and the amount will be calculated. That is the reason we can say. This is your difference part on straight line method and written down value method. Next come to the next part, that is to be your national income. What is national income? Very simple concept when you have to listen these words, because once this concept comes in front of you, at that time, national income in the sense nation income, country's income, ultimately you thought that. So what is national income? Let me clear the meaning about national income. National income in the sense what? The total value of all goods and services produced within a nation over a specified period of time, representing the sum of wages, profits, interest and pension payment to resident of a nation. Right? So you see here the total value of all goods and services produced in our country, all goods and services produced within the nation, the geographical boundary of the nation within the nation, in the sense what? Geographical boundary of the nation over a specified period. Because when you to calculate the national income will be calculated on a specified period. Generally what happen? It is to be 1 year, 12 months it consists of. That's why over a specified period of time, representing the sum of, it may be the sum in the sense total, right? Representing the sum of wages, profits, interest, pension, payment to resident of nation. Payment to resident in the sense the country's people, resident in the sense country's people. So now we make an introduction about that. This is the meaning. So the concept of national income introduced by Dadabhai Naoroji in 1876. Dadabhai Naoroji, the great people of India, by estimated the value of agricultural production, because initially as we know that our country will depend upon agriculture, and here 80% people are also go through agricultural practices. That is the reason we can say initially it is to be depend upon the agricultural production, Dadabhai Naoroji. But it is in a traditional method, it is to be calculated national income. But after that, the first person to adopt scientific procedure to find out the national income, and he was Dr. V.K.R.B. Rao in 1931. Right? So when you to calculate the national income, there are some specific concept we have to consider. Right? When we to calculate the national income, that is what? GDP. First concept is your GDP. Very familiar word. So many times we are listen these words or facing this word on paper, news and TV channel also. GDP. What do you mean by GDP? A very important concept are there, because so many times so many people think that GDP if grow, then the country's income will be grow. GDP will be less, then the country's income will be less. And because country's status, country's financial position depend upon GDP. So if it is an important one in every sector, then what is GDP? GDP means what? So you see, GDP, gross domestic product. Gross in the sense what? What do you mean by gross? Gross in the sense total. Domestic in the sense what? Domestic in the sense within the boundary of India, geographical boundary. Right? In book word you have to find out the geographical boundary of our country. So within the geographical boundary of India. Then product in the sense what? Income. So what do you mean by GDP? So GDP means what? Total income within the geographical boundary of India. That means what? GDP. That means GDP. So let me use one example. Your doubt will be more clear about that. The concept will be more clear. How GDP will be calculated. You see here. I'm giving you one example here. You see. Let's say this is the boundary of India, right? This is the boundary of India. Now, three person I am consider here. One person, Mr. A, resides Indian. That person is Indian and his earning is with in India also. His earning, he resides India and earning in India also. That is to be 12,000. Let's say. Now, Mr. B, he is also Indian, resides in India, and it's his income 7,000 in India. Now come to Mr. C. He is not an Indian. He is come from China. That's why I am representing here C. China. He resides India now and getting 2,000 income, let's say. And another person I am also giving here, Mr. D. Right? He is Indian, but reside Australia, let's say. That's why I am representing here A. He is Indian but resides Australia and his income is 5,000, right? So now when you to calculate GDP, you see here how to calculate GDP. So here GDP is equal to, you see, 12,000 Indian income, 7,000 also Indian income, 2,000 though he comes from China, still he resides India and earning income within our geographical boundary. I am giving the concept about geographical boundary, right? GDP when you to calculate it, I am giving the concept that is to be geographical boundary. Here GDP, you see here, gross domestic product, total income within the boundary of India. That's why the person may be either in India or may be in outside India, but if he resides in India and his income is considered within India, he may be a foreigner, he may not be Indian, but still if he earning in India, then his income will be considered. That's why I am taking here 12,000 is your Indian income and 7,000 is also Indian income, but 2,000 is outside India, China people, but still he is earning here. That's why you have to calculate 12,000 plus 7,000 plus 2,000. So 21,000 is your what? GDP, gross domestic product. But after that, after GDP, next concept is your come to GNP. What is GNP? GNP in the sense what? Gross national product. You see here, gross national product. So gross in the sense what? Gross means total, national in the sense by Indian national, and product in the sense income. So you can say total income earned by Indian is called GNP, gross national product. So it may earn either within India or outside India, right? Indian people must be, first thing is he must be an Indian. He must be an Indian, first thing. Then second thing is either his income geographical boundary of India or outside India, right? That's why I have to say either within India or outside. That is GNP. But in GDP, what? Geographical boundary, only geographical boundary. Not outside. I'm not considering here outside, because outside person is Mr. D is outside person. He is an Indian. Still he resides Australia and his income is also come from Australia. That's why we are not consider under, when we calculate GDP, we are not consider that figure, that is to 5,000 is not considered here. But in case of GNP, what happen? We have to consider, because it must be an Indian. First thing is your Indian. He must be an Indian. When you consider the GNP concept, he must be an Indian. First concept. Second thing is your what? He may resides India or outside India. His income may within our boundary or outside may be. We have to consider. That's why you have to, when you have to calculate GNP, you see here 12,000. That means is your within India geographical boundary. He is an Indian. Geographical boundary was also, it's not a geographical boundary is not considered here. 12,000. Then is your Indian 7,000, and we are not consider Chinese people here, because we have to consider that one Indian only. Here our main motto is, our main target is your Indian people. Here in Indian people, that is 5,000. So you have to calculate here 5,000. So 12,000 plus 7,000 plus 5,000, that means what? 24,000. That is, we will have to consider 24,000. Now come to make a comparison about these two things, GDP and GNP. You have to make a comparison. You see, GDP is how much? 21,000. We have to consider here initially 21,000, and GNP is how much? GNP is your 24,000. You see here 24,000, right? So 24,000. Now both Indian and as well as foreigner also. So GNP, we have to consider GNP is equal to GDP, gross domestic product, plus FIFA minus FITA, right? That is to be known as NIFA also. So how does it mean? FIFA, factor income from abroad. Factor income from abroad. FITA, factor income to abroad. And NFIA, net factor income from abroad. So what does it mean? Why you have to say this? Because FIFA means what? Now factor income from abroad, outside. Factor income outside. Who is your outside factor income? And factor income to abroad. So when you have to calculate GDP plus NFIA, how to find out NFIA? Instead of FIFA and FITA, we can write down NFIA. NFIA formula is your FIFA minus FITA, means factor income from abroad minus factor income to abroad, right? So we have to directly NFIA. So GNP is your GNP. How to find out? GDP plus NFIA, right? In the sense, net factor income from abroad. So then we have to calculate here. So next come to NNP. NNP in the sense what? Net national product, right? NNP, when you have to calculate NNP, we have to consider another concept here, that is to be what? Now depreciation, right? That we already discussed in the last class. What is depreciation? Depreciation in the hand, reducing value of the asset, that we already fixed assets, tangible fixed assets, ultimately we have to say. So when you have to calculate NNP, net national product, we must be subtracted depreciation from GNP. Whatever the GNP value are there, we must be subtracted, right? So then you have to calculate net national product. Depreciation, suppose we can say we purchase this pen. This is a pen. We purchased this pen 2 months before, right? Suppose 100 rupees. If you have to sell this pen today, can it be 100 rupees? No. Why? Because due to wear and tear, due to efflux of time, or in the time being, that is what happen, the value will be reduced. It may be 50 rupees, 30 rupees, whatever the amount of value reduced. Suppose 100 rupees was there, if you have to sell this one, 30 rupees. So 70 rupees you have to reduce. That 70 rupees is your depreciation. So when you have to calculate NNP, at that time, we must be subtracted from GNP. GNP minus depreciation, that is your what? NNP. That means net national product. When, so national income, our concept is what? National income. National income depends upon two things. What? Factor cost, or that is to be known as NNP factor cost, net national product factor cost. Another is your market price, or ultimately we do say NNP market price. So how to find out NNP MP? In the sense, net national product market price. How to find out? Because market price in the sense what? Net national product factor cost in the sense factory cost, that is ultimately to say. So we have to consider factors of production in that part, factor cost plus indirect taxes, because government when produce any industry, when produce a product, when why he has to produce a product? Because to sell the product in the market, it is automatically not sold in the market. There are some procedure we have to follow. So when that product will be come to the market at that time for sellable position, we must be add some taxes, that is to be indirect taxes, not direct taxes. Taxes are two types, as you know, direct taxes, indirect taxes, but only indirect taxes will be considered. Indirect taxes will be pay each and every people, right? But direct taxes only income person they are paying. So indirect taxes will be considered. When you have to use a mobile, when you have to use television, if any item we have to use, we have to pay some taxes, that is to be known as indirect taxes, right? Go through indirectly, the government will collect the amount of taxes from the public in that way, that is indirect taxes. And another is your subsidies, discounts, subsidies will be there. So if government will be provide some subsidies when we to purchase, suppose any item we have to purchase, especially you can say an agricultural item, agricultural instrument, so many times government will be provided subsidies, that will be considered here. So subsidies will be there. So in NNPMP here, you to suppose a product price will be 25,000, indirect taxes 5,000, then subsidies 3,000, then you have to hand out 27,000 here, right? That is your NNPMP market price. This is all about the concept of national product. Then come to measurement of national income. Next is your measurement of national income. How national income will be measured, right? If a country income is an important one, then how a national income will be measured, right? Another thing I want to say in the GDP part, I am just left over that one. You see, in GDP part, we are asking, we are listening this statement so many times that GDP, that some economists expected that GDP will be grow after next year or 2021, 2022, in that way. Because when the GDP will be in the growing period, in the sense the foreign investor are interested to invest the money in India. That is the important factor. That is one of the factor and important factor also, because when the foreign investor are interested to invest their money in India, ultimately our income will be grow. So that income, when that income will be grow, then GDP automatically grow. These things will be there. GDP will be 7.5, 6.5, 5.5. In that way, we are also looking this from different newspaper and television. So these things will be there. Anyway, so now come to measurement of national income. So what is how to measure the nation income, country's income, how you have to measure, because it is an important part. If the national income will be there, then the country has to, or the government, ruling government especially, the country ruling government has to make a plan that how this amount will be expense in different sector, how invested in different sector ultimately. That is to be measurement of national income. So now there are three methods are there. Three methods are there to measure the national income. The first one, that is to be product method, or you say output method, or it is ultimately known as value added method, right? So product method or output method or value added method means what? What do you mean by product method? So when we take a gross market value of all final goods and services both, not only goods, because we are observing sometimes goods and we are observing sometimes services also. Client, just like you can say lawyer services, doctor services, chartered accountant services, so lecturer services. So when we take gross market value of all final goods and services, it is called product method, right? So how to find out national income under product method? There is a specific formulas is there, that is to be C plus I plus G plus X minus M. X, this is X, right? X minus M plus R minus P minus depreciation, DEP dot, in the sense depreciation, minus indirect tax plus subsidies. This is the formula of national income, right? So what does it mean? C means what? So C means consumption, I means investment of private person, and G in the sense what? Government investment and expenditure, because there are some certain sector are there where government invested and his expenditure is also there. Making of road, government investment, government expenditure, that is bridge, infrastructure, country infrastructure, government investment. You can take the better example, today's COVID-19 hospital prepared, it is government investment, government expenditure. So for the benefit of the public. Anyway, so then is your x in the sense export, and m in the sense import are receipt, and next is your p in the sense what, payment, p in the sense payment. So this method, this is a first method to measure the national income under this formula. When you have to calculate or you have to maintain this method, the first method, that is to be product method, or you say output method or valuated method, we must be consider some precautions, right? What precaution we have to make? So first one, avoid double counting. What is double counting? Double counting means what? What do you mean by double counting? Double counting means what? When you have to prepare a product, wait a moment. Double counting means what? When you have to prepare a product, at that time, or you say sometime what happen, we are maintain two times. In the sense, suppose raw material cost will be considered, finished product cost will be considered to prepare a product. At that time, that is called double counting. So national income calculation will be wrong one, because raw material cost, if you have to consider, you may not be take the finished product. If you have to take finished product, then you may not be take the your raw material, right? So avoid double counting. Then unpaid services are not included. Unpaid services means what? Unpaid services means suppose mother services to the family, there is unpaid services, the amount is not taken here. That is the reason we cannot consider. And include the value of self consumption. If any personal consumption are there, that will be considered also. It must be expressed in price. And net income from abroad should be added also. Net income from abroad in the sense outside. He must be or she must be an Indian, and earn income from outside any other country, right? That is to be net income from abroad. And depreciation of capital assets should be deduction also. From capital assets, depreciation should be deducted. That we already discussed in NNP part. Then come to indirect taxes should be deducted, and subsidies should be added. So all these precautions will be maintained in case of first method when you to calculate, that is national income. Then come to second method. Second method is your income method. Income method means what? How to calculate national income under income method? Now, income payments received by all citizen of a country, all citizen, right? All citizen of a country in a particular year are added up. Particular year, because when you to calculate national income, it is specified time period. 12 months especially in a particular year. It may be 2018, 2017, 2019, 2020, in that way. Not all year. It is year basis calculation, year after year, that is to be calculation. Each year there are some specific calculations are there. Anyway, so national income, NI, national income is equal to rent, wages, interest, profit, then mixed income, net income from abroad. Net income from abroad means the sense outside country income, right? Then there are some precautions we have to maintain when you have to calculate national income under income method. What precaution? First point, exclude unpaid services. Exclude unpaid services. That is just like I am just discussed last point also. Exclude unpaid services, mother services. That is ultimately. Then come to transfer payment like pension, gift are not included in income. You cannot consider the net income of pension payment by government to the oldest people, or you say retired people, right? And gift are not also. If any government will be provided any gift at that time, this is not considered under national income. Then income from illegal activities are not included. Illegal activities, right? Your income, maybe you can say my income is 1 crore through fraud, right? It is illegal activities. Illegal activities is not considered, right? Then income from second hand goods are to be excluded. Second-hand goods, if you have to sell whatever the profit are there, that is not considered here. Income from second-hand goods are to be excluded here when you have to calculate. Then direct taxes. Next is your next point. direct taxes and subsidies are also excluded, because we will not consider direct taxes. Direct taxes in the sense income tax. Income tax is your direct tax. Suppose a person is earned income, suppose a person's salary is 60,000. Out of that 60,000, there are some tax he has to pay to the government. That is direct tax, income tax ultimately. So that will not to be considered here. Then come to net income from abroad should be included. This all these equations we have to maintain. We have to calculate the national income under income method. Then the last method, that is to be third method, expenditure method, or you say outlay method. So how to calculate national income under expenditure method, or you say outlay method? When we add all the expenditure incurred on purchase of final goods and services, that is final goods and services, right, we get national income. So national income is equal to, there is a specific formulas for to find out the national income under this method. National income, NI, national income, that equal to C plus I plus G plus X minus M plus R minus P, that is P, right, minus P, right. So that things we know in the past bit it was there. C in the sense consumption, I in the sense that already we know all these things. Then come to is your precautions. What precaution we have to maintain if you have to if you want to calculate national income under expenditure method, what precaution we have to maintain? First bit is your avoid double counting. Same thing, raw material and finished good. One product will be produced, but sometimes what happen, we are taking the price two times. In the sense, when you to purchase the raw material, you have to take the cost also. When the finished product preparation, there are some cost will be involved. That should not be happen. Then is your government expenditure on transfer payment is to be excluded. That is gift and pension. Transfer payment in the sense what? What do you mean a transfer payment? Gift and pension when government paid. Then come to third bit, expenditure on second hand goods are excluded also. Second hand goods is expenditure on second hand goods to prepare the second hand goods. Suppose you have to purchase a bike, to make it effective, there are some money, there are some expenditure for the repairing expenditure, or you say repairing expenditure. That expenditure will not consider here, right? That is second hand goods expenditure. Then it deduct indirect taxes and add subsidies. If government will provide some subsidies, you have to add it up, and you have to subtract indirect taxes also, right? This is all about your what national income and its methods of national income. So today we discuss what the last class study, that was your difference between straight line method and WDV method. It's an important question. It is an important question also. And here we have to find out the concept of national income, GDP, GNP, NNP, and under this you can find out the methods to measure the national income. There are three methods are there. One is first one is your product method, or you say value added method. Second is your income method, and the third one is your expenditure method, or you say outlay method. So today this much there. Thank you.